This is Daniela Cambone for Kitco News, and you are watching Technically Speaking with Jim Wyckoff. Hi, Jim. Good to see you again.
Good morning, Daniela.
All right, Jim, let's do a little bit of a recap what we saw this week. Yesterday, we saw a lot of choppiness in the markets. What can you tell us about it?
Yes, indeed, Daniela. In fact, February COMEX gold, as we speak, is scoring a technically bearish outside day down on the daily bar chart. That means the high is higher and low is lower than yesterday's trading range, and with a lower last trade. What we're seeing coming out of the EU is some disappointing results, not only from a European Central Bank interest rate cut that was less than expected, but also some comments from the head of the European Central Bank that suggest that there is going to be no dramatic development coming out of this Friday's summit meeting between EU officials. There was talk that there might be some kind of so-called bazooka development that would shake things up to the positive side, but it appears that officials now are going to maybe take some smaller steps instead of some big dramatic development. Also, Germany this week, reports have said that Germany's dragging its feet on any dramatic new moves to solve this European Union debt crisis. All this has worked to shrink investor risk appetite, and as we know, the past several weeks, gold has been acting like a risk asset and been following commodities. So we're seeing commodities under general selling pressure today. We're seeing the stock market under selling pressure. Precious metals are following along. So it's a risk-off day today, Daniela.
All right, great, Jim. So overall, what are you looking at technically for gold?
Well, technically, the gold market remains in a 10-week gold uptrend on the daily bar chart. And of course, we still have a 10-year-old uptrend on the longer-term monthly chart. As I said earlier this week, dips in the gold market, history has shown, are buying opportunities. I see no reason for that to change. The longer-term, shorter-term trends remain up. We've got overhead resistance at last week's high of 1660 or 1767.10. That's 1767.10 resistance at last week's high.
All right, Jim, let's get some of your thoughts on silver.
Okay, regarding silver, Daniela, trapped in a sideways trading range, following gold to a degree, but silver does not have the safe haven investment allure that does gold. Silver will continue to follow gold to a degree, but right now silver just kind of trapped in a sideways trading range as the bulls and the bears kind of fight for near-term technical control, with neither gaining much of an advantage. Solid support for silver, $30, resistance at $34.
All right, Jim, great. Final thoughts for investors this week. Let's wrap it up.
Well, the marketplace continues to focus on developments in the European Union. We'll see how Friday's EU summit winds up, but as we speak right now, it does not look like the marketplace is looking for any dramatic fixes to be announced this week from the EU. So what that means is maybe we'll head into next week and look for more developments coming out of that EU debt crisis that just seems to linger on.
All right, Jim, all eyes on Europe as always. Thank you so much, and we'll see you next week.
Next time, Daniela. Bye-bye.
And thank you for watching. You can email me your comments and questions at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.